What's up guys, it's Daniel here. Welcome back to the channel. So today I'm going to show you 6 different types of candlestick patterns that you can use to help you predict the price movement of the stock that you are trading. These 6 different candlestick patterns are topping tails, bottoming tails, neutral doji, Longlegged Doji, Gravestone Doji, and the Dragonfly Doji. So if you're new to my channel, please consider subscribing for new weekly videos, and also please hit the like button as it really helps with the YouTube algorithm. Okay, so let's head over to the computer now and start with the topping tail candlestick. So topping tail candlesticks are a great indicator of a potential reversal in a stock. The topping tail will generally be present in a stock that has been trading up and is possibly ready for a reversal. And the candle will look like this. It will have a large wick at the top end of the candle. So what happened here is the candle opened here and then went all the way up to here before being pushed back down by sellers to here. And that creates this large wick at the top of the candle here, which is a topping tail. And this is an extremely important area to keep an eye on for a potential price reversal, as it is showing weakness in the direction of the stock due to the pullback on the candle that created the large wick. The bottoming tail is basically the reverse of a topping tail. In this example here, you can see the stock was in a downward trend. And then on this candle here, there was a sharp sell-off. Basically what happens is that sellers push the price down, but then buyers came back in and pushed the price back up. And so the candle closed pretty much where it opened. And this would be somewhat of a bullish signal around this candle. And this candle is a sign that there may be a price reversal coming. So keep an eye on bottoming tails that look like this for a possible change in direction. And in this example, the stock did reverse and go back up. Now in both examples of the topping tail and bottoming tail candlesticks, it will sometimes take a few candles to confirm the change in direction, especially if you are watching shorter time frames like the 1-minute chart. Topping tails and bottoming tails can also be used on a longer time frame as well and can be relatively reliable. The doji candle. So the doji candle comes in a few different variations, and the first one we will cover is the neutral doji, which looks like this. Basically, the opening and closing price are virtually the same, and there are equal wicks on the top and bottom of the candle. And it often represents a sign of indecision of which way the stock will trade. As you can see, the candle here opened, and it went up, it came down, and then eventually closed at exactly the same price. It is important to watch a chart closely when a neutral doji appears, so you can be prepared for the next move in the stock, whether it be a continuation or a reversal. So next up is the Long-Legged Doji candle. Now this candle is very similar to the first example, except it has larger wicks on both the top and the bottom, as you can see here on this example. So both the upper wick here and the lower wick are pretty much the same size. And this candle still indicates that there is an indecision in which way the price may go. It can also be a point where the stock starts to consolidate. If the long-legged doji appears in either a strong uptrend or downtrend, it can be a sign of a potential trend reversal. Next up is the Gravestone Doji candle. Now the Gravestone Doji actually has more of a meaningful signal than the previous 2 doji candles. It is a bearish candlestick formation, and as you can see in this example, the candle opened here, and then buyers pushed the price up, but then sellers came in and pushed the price back down, and this created this large upper wick here. Now this looks similar to a topping tail that I showed you earlier, but the difference is that the Gravestone Doji generally has almost no body in the candle and just a large wick at the top of the candle formation. And this can be a sign that there will be a price reversal in the stock, which actually happened here. And lastly is the Dragonfly Doji candle. Now this is basically the opposite of the Gravestone Doji. As you can see in this example, the candle opens here and sellers push the price down, but then buyers come back in and push the price straight back up, creating this long lower wick here. And this looks very similar to a bottoming tail I showed you earlier. But similar to the previous candle I just talked about, it has almost no body at all and just a large wick formation at the bottom of the candle. It's not uncommon to see this form when there is a downtrend in the stock, and it is a potential sign that the stock could reverse its trend and go up. In this example here, there wasn't much of a downtrend in the stock, but after this Dragonfly Doji, there was a large push back up in the price. Okay, so that's just a quick and simple explanation of these 6 different candlestick formations that you can use to help you be more profitable when you're day trading. Now I strongly suggest that you practice following these candlestick formations using a trading simulator so you can refine your technique before you actually use real money. I hope you found this video helpful, and if you have any questions, please leave a comment below, and as usual, please like and subscribe.